Have you ever wondered what would happen if Southeast Asia suddenly collapsed? Would it just be a regional problem, or could it trigger a chain reaction that shakes the entire global economy? Today, we're diving deep into why this region, home to over 650 million people and some of the fastest growing economies in the world, is absolutely critical to global financial stability. From manufacturing and trade to technology and natural resources, Southeast Asia is the engine that powers a huge part of the world. And if that engine sputters, the consequences could be catastrophic for every major economy, from the US to Europe to China. In this video, we'll break down 5 shocking reasons why a collapse in Southeast Asia wouldn't just stay local, it could literally crash the global economy. Stick around till the end, because the last point might change the way you think about your investments, your jobs, and even your daily life. This isn't speculation. These are hard facts, trends, and vulnerabilities that the world can't afford to ignore. So let's uncover the hidden risks behind a potential Southeast Asia economic meltdown. Point 1. Supply chain shockwaves. Southeast Asia is often called the world's factory floor. Countries like Vietnam, Thailand, and Malaysia supply electronics, automotive parts, and textiles to nearly every major economy. Imagine a sudden collapse. Factories halt production, ports shut down, and shipping routes are disrupted. Companies worldwide would face shortages, skyrocketing prices, and delays that could last months or even years. This isn't hypothetical. We saw a glimpse of it during the COVID-19 pandemic, but a full-scale collapse would amplify these shocks exponentially. Retailers, manufacturers, and even small businesses everywhere could face empty shelves and broken contracts. And it's not just physical goods. Southeast Asia also plays a crucial role in critical components for tech products. Without timely delivery, major tech giants could see production stalls, stock prices plummet, and investor panics spread globally. In short, a supply chain crisis here doesn't stay local, it echoes across the planet, affecting both the rich and the poor, from Silicon Valley to the streets of Europe. Point 2. Financial contagion. The financial systems in Southeast Asia are deeply intertwined with the global economy. Banks, investment funds, and multinational corporations rely on stable markets in the region. If major economies like Indonesia, Thailand, or Singapore face sudden financial collapse, the ripple effect could trigger global market panic. Stock exchanges could crash, currencies could plummet, and debt defaults could skyrocket. Investors worldwide would scramble for safety, creating a liquidity crisis that could last months. Remember the Asian financial crisis of 1997? That was just a taste. A modern-day collapse would be amplified by global interconnectivity, high-tech trading algorithms, and massive cross-border investments. Even countries far away could see their stock markets nosedive overnight. This financial contagion could impact pensions, savings, and national economies everywhere, not just the region itself. A Southeast Asia collapse isn't an isolated event, it's a trigger that can shake the foundations of global capitalism. Point 3. Trade disruption. Southeast Asia is a hub for global trade routes connecting the Pacific and Indian Oceans. Ports in Singapore, Malaysia, and Vietnam handle millions of containers every year. A collapse in the region would halt shipping, delay imports and exports, and raise global shipping costs astronomically. Industries from oil and gas to electronics and agriculture would feel the crunch immediately. Countries reliant on imports from Southeast Asia would face shortages, inflation, and logistical chaos. Even energy markets could be affected, as oil, gas, and rare minerals pass through these trade arteries. Global corporations might have to rethink entire supply chains, moving production or stockpiling goods, a costly and inefficient response. This disruption wouldn't just hurt businesses. Consumers would feel it too, in the form of higher prices and less availability of everyday products. Southeast Asia isn't just a regional player, it's the circulatory system of global trade, and any blockage could cause systemic shockwaves worldwide. Point 4. Resource scarcity and inflation. Southeast Asia is rich in natural resources: palm oil, rubber, rare earth metals, and seafood. These commodities feed global industries from food production to tech manufacturing. A collapse would create sudden shortages, driving prices up globally. Imagine rare earth metals for smartphones and electric vehicles becoming scarce overnight. Inflation could surge, affecting everything from groceries to electronics. Economies reliant on these imports would struggle to adapt, potentially triggering social unrest and political instability in distant countries. Beyond raw materials, agricultural products from Southeast Asia feed millions. Shortages in rice, palm oil, or fish could lead to higher global food prices and even famine in vulnerable regions. This is why investors, governments, and corporations keep a close eye on Southeast Asia, because resource scarcity here doesn't just stay local, it spreads across continents, threatening economic stability for everyone. Point 5. Geopolitical fallout. A collapse in Southeast Asia wouldn't just be economic, it would be deeply political. Power vacuums could emerge, escalating conflicts, territorial disputes, and regional instability. Countries like China, the US, and India have strategic interests here, from trade routes to military bases. A sudden collapse could trigger intervention, heightening global tensions and uncertainty. Investors hate uncertainty, and markets could react violently. Beyond finance, geopolitical instability could disrupt international agreements, global shipping lanes, and multinational operations. Even countries far removed geographically would feel the effects as insurance premiums rise, shipping costs spike, and multinational corporations rethink regional strategies. Essentially, Southeast Asia is a geopolitical linchpin. If it falters, the ripple effect threatens both peace and prosperity worldwide, making what happens here relevant for every global citizen. So, what does all this mean for you? A collapse in Southeast Asia isn't just a distant worry, it's a real risk that could affect jobs, investments, and daily life worldwide. From supply chain disruptions and financial contagion to trade interruptions, resource shortages, and geopolitical tensions, the global economy is incredibly vulnerable if this critical region falters. Understanding these risks isn't about fear-mongering, it's about being prepared and aware of how interconnected our world truly is. The next global financial crash could start here, and knowledge is the best defense. If you found this analysis eye-opening, make sure to hit the like button, subscribe, and turn on notifications. Share your thoughts in the comments. Which of these 5 risks do you think is most likely to trigger a global collapse? And don't forget to check out the related videos we've linked below to stay ahead of the world's biggest economic threats. Remember, staying informed today could protect you tomorrow.